can answer some of these questions better than last period did. Okay? So what we're going to do is start looking at this worksheet. That's what we just did in the last chapter. Right? Working through the worksheet, calculating it all. Let's put the phones away. Music off. Okay, these numbers right here, where did they come from? Say it again? The ledgers. Okay, so we kept track of things all year long. We kept updating our balances when we bought or spent money on things. And so at the end of the month, we pulled all the numbers from those balances at the end of the ledgers. Okay, then we did some adjustments. We did some updating. Okay, so really, and then we journalized and we posted these adjustments, right? We did that on the test yesterday. Okay, so then really our ledgers are now even more up to date, and these numbers that we extended across should still match those ledger numbers, right? Okay, so our income statement and our balance sheet are coming from the ledger information. Okay, but that's a lot of pages to look at. Right, if somebody wanted to see our financials, there's pages and pages of ledgers. Okay, too much information, too much detail. All right, so what we're going to do is we're going to do a income statement, or financial statements, balance sheet, income statement, to help summarize that information and put it into a form that's recognizable by everybody, because most people can look at a document and go, oh, that's an income statement, or that's a balance sheet. At least people in the business world, right, that have had some experience with business. Okay? So basically that's what we're doing, is we're now summarizing and putting that ledger information into a form that can be presented to people. Now, two kinds of accounting: financial accounting and managerial accounting. When we're putting these documents together for the public, for investors, for stockholders, for bankers, that is financial accounting. You're putting the information together for the public. Okay? There are different kinds of reports and different kinds of information, probably a little bit more detailed, maybe more related directly to expenses or sales. That's called managerial accounting. Okay, so you're doing reports and summarizing information for your managers, your CEOs, your presidents, your CFOs. Okay, people inside the company. Okay, so financial accounting is external reports. Managerial accounting is internal reports. All right. I would say that every business major, probably in the world, is going to have to take 2 accounting classes. Most likely your sophomore year, okay? And it's going to be these 2. This is usually how they're named: financial accounting, managerial accounting. I've seen some do accounting 1, accounting 2. Okay, I guess because they want you to take it in a certain order. But most of the time you'll see these 2 as your first 2 accounting classes, no matter what business degree you're going to have: marketing, finance, whatever, right? Every business major has to take accounting. Right there, those are the first 2. And you got a big step up on a lot of people, because you're going to understand what they're talking about just like that, right? You're going to know what debits and credits are, right? You're going to understand what happens when you're journalizing and so forth. Okay. So what we're going to do is create the financial statements, basically doing 7-1 together. And it tells us that this is Hair Care Salon. It's the month ended May 31st. Now, everything in this book works by months, but that's not really real world. This is too much work to do every month. Okay, real world, we're going to do this whole process, this end of period work at the end of the year. We might do a variation of it at the quarter or at mid-year. Okay, but for simplicity's sakes, our book always works in months. All right. So end of the month, prepare the income statement. That's all it's telling us to do. Okay. Now what they're going to give us, and you'll see it on your working together, okay, is a partial worksheet. So just to kind of realize what this is, okay, on the worksheet, we've got the account titles for everything below income summary, right? And we've got these 4 columns for everything below income summary, okay? So basically, we're looking at this section and this section. That's what's saying it's so partial. It's pulling the 2 pieces out that you need. It's leaving all this other stuff out because we don't need that for this. We just need these last 4 columns and know what account goes with them. Okay? So just again, just so you remember, recognize where that information's coming from. Okay. We're doing an income statement. Okay? The income statement is about revenues and expenses. And we're going to calculate net income. And really, we have net income already calculated, but we're going to show the math here again. So everybody can see the sales, the revenue, the expenses, and what we have left, the net income. Okay, so here's our information. Here is a blank document that we can use for the income statement. We've got our 3 lines at the top. This is our heading. So who, what, when. Hair care salon is our who. What is our income statement. Okay, and the when is the date. Now the income statement has net income on it. What did I tell you about documents that have net income on it? What do we have to add to the date? For the month ended. Okay, so for the month ended, and what's our date? May 31, 2019, and this is the when. Okay. All right. So we've got, this is of course for all of our account titles. Okay. Then we've got 2 columns that look like our normal accounting columns, right? This is not a debit and a credit column. That's the first thing I need you to remember. Okay. We're going to label this as part of your notes. You don't need to label it like this in your actual work. But I want you to think about this as the calculate column and the total column. Okay, not a debit and credit column. All right, our first section will be revenue. And we'll indent a little bit, and the only thing that we have for revenue is sales. Okay, later on we'll have things like when people return items to us that we sold to them, we have returns, we have discounts that we gave because they paid early. Okay, so there'll be some other things that will roll into there later. But right now, simple version, sales. Okay, where do I get that number? Right here, right? Okay, does it matter what side it's on? No, we're not worried about debits and credits right here. Okay, we just need the number 5,800. Okay, is there anything else that's going to come under revenue? No, so it just needs to go straight to the total column. So, oh, I did that. Y'all didn't do that, did you? Use that wrong line. Did y'all do it too? Did I make you do it? Okay, and we're going all the way over to the total column because there's nothing to calculate. There's only one number for revenue. okay? Then expenses. Okay, we've got a whole list of expenses, right? So we've got to get that whole list in, and we're going to have to take all of these numbers and add them up. So these numbers will go in the calculate column. All right? So advertising expense, cash short and over, insurance expense, miscellaneous expense, supplies expense, and utilities. Okay, and then we'll have total expenses. All right, now we got to get all these numbers. Again, it looks like it's matching up right side, left side, but it's not. Remember, we don't really care about the debit credit when we're bringing it down here. It just so happens that we've got to calculate these numbers. So $750 for advertising. $3, $610, $167, $540, $300. Okay. Now, luckily, we've already added that up. Yes, 2370. Okay, so you can add it up again to double check. But it is a total, so we'll put it over here on the total side. 2370. So that's what I mean by the calculate column and the total column. Okay, then we need to find net income. How do I find net income? It's the difference, right? Revenue minus expenses equals net income. Okay, so draw the line, subtract the 2. We did already calculate it right there, 3430, so you can double check the numbers. Okay. So again, these two columns have nothing to do with debit and credit. It's all about just having a calculate column and a total column. Try to remember that on this one. Okay, then we have one more column we need to look at here. It's called percent of sales. And this is calculating ratios. And ratios are an important part of finance and accounting because that gives you the ability to compare. All right, so let's say I'm an investor. I'm looking to invest in a salon. And I have several options. Some are small, some are bigger. Okay, so net income and sales and expenses would be very different between different size salons, right? It might be very different in different areas of the state or the city, okay? But if I break it down to percentages, then it's like leveling the playing field. I can compare one company to another, okay? So the ratios that you usually want off of an income statement are percent of sales. So that should tell you that your sales is always going to be your denominator here, okay? And we're really just looking at the total column. We don't care about the individual expenses. We just care about the expenses as a whole. All right, so what is the percent of sales for total expenses? So 2370 divided by 5,800. What's the percent of that? Anybody have it? .408. What? Okay. So move the decimal twice to get it to percentage, right? So 40 point and go to one decimal. 40.9. All right. So 40.9%. So of all of our sales, 40% of those are or the percentage there, the ratio is 40.9%. Okay. And then net income divided by sales. So 3430 divided by 5,800. Somebody got the math for me? Okay, 59.1. Now, could I have done that by just subtracting from 100 too? Right? Because there's only two numbers. If we have more than that, you can't do that. But all right, and then what's sales divided by sales? What percentage? 100%. Okay. So this gives us the ability to compare one company to another. Doesn't matter location, it doesn't matter size. Again, it kind of levels the playing field. So these are important numbers, these ratios. This right here is called return on sales. This one. Return on sales. Common term, common thing people want to know when they're investing. What's the return on sales for a company? How much profit are you making compared to the sales? And that kind of gives people an idea of the expense breakdown too. Are you spending too much money on other stuff? Okay? All right. So that's income statements. Let's flip to balance sheets. So 7-2. Okay, again, we have that partial worksheet. Okay, this is a balance sheet. The balance sheet is all about the accounting equation. Assets equals liability plus owner's equity. Basically, we're proving that that statement is still in balance, that formula is still in balance, okay? So to prove the equation, the accounting equation is still in balance. Told you from week 1. We had to always make sure that that was the case. Now we've got to prove it to the world, right? That we did all our accounting work correctly, everything's balancing out, we put things into the correct accounts. Okay. So again, here's our partial worksheet. These are the accounts above income summary. And then we've got just the balance sheet information over here from the far right of that worksheet. Looking at our list, what is cash? Asset, liability, owner's equity. Asset, petty cash, asset, accounts receivable, assets, supplies, prepaid insurance,